The US dollar remains at risk to even further downside as FOMC members discuss greater action. Now, as we've seen really over the last 6 weeks, the dollar has been kept largely at bay, right? Upside is extremely capped. And if you look at that for the Dixie, we saw our worst weekly performance that we've seen for some 5 weeks now. Why is this? Well, really, since the FOMC ramped up all of its efforts with, all this stimulus action, like pumping trillions of dollars into the market, that has been a reason as to why the dollar bulls have really struggled to, continue that momentum that we saw right at the beginning of the year. The dollar had been, gradually pushing to the upside. And that was right up until March, where there was a huge scramble for dollars, if you remember correctly. Why was that? Because, it hit the markets that coronavirus is really starting to have its impact. And bear in mind, we hadn't even seen all the economic data at that point, but markets were really starting to get spooked and nervous. So that's why we saw a large scramble for dollars, the most liquid currency in the world, the reserve currency of the world. And people thought, let's use the dollar as a safe haven. Now, since that period, and that was earlier in March, the dollar struggled. He has struggled. And understandably, at the end of the day, the central bank is diluting the markets with loads of dollars. And in some recent comments, obviously, if we just quickly go to the rate decision that we saw this week, Jerome Powell was dovish. He left the door open to greater action as well, and just noted that rates are to remain at record lows for the foreseeable future, given no idea of time when they might start to lift those up again. So very much dovish and dollar negative. And then we had some comments out of FOMC members just on Friday, and they were discussing how there's serious damages to the economy. They still see a very worsening picture for the labour market, for the unemployment rate. And bear in mind, one of their key drivers or influences for their decisions is the labour market, right? We've got inflation and we've got the labour market, and where they still seeing that bad, they're noting that at the end of the day, they're going to be conducting more and more stimulus right up until, at least until the end of this year. So what do you think that's going to happen to the dollar? Well, it will in fact have a further damage on the US dollar. And let me just note one thing though, guys. I'm still seeing some near-term risks to the downside for the dollar, but one thing let me note. At the end of the day, the FOMC is acting. They're really acting and aggressively to try and cushion the blow of the economic impact from coronavirus. So at some point, given the extent to which they are acting, that will be a confidence booster at some point for investors, and we'll see a huge reversal and a big bull rally for the dollar. Okay, but just because at the end of the day, markets will look, okay, the central bank, the FOMC, compared to the Bank of England, compared to the ECB, compared to the BOJ or whoever other they want to compare with, Bank of Canada, the FOMC is really taking some serious action. So that is a massive confidence booster for me as an investor. So I want to back the dollar. Back the dollar again, and we'll start seeing the dollar at some point clawing back all of these, the losses and driving really aggressively to the upside. A similar thing was actually seen back in the 2008-2009 crisis when the FOMC first introduced quantitative easing. We saw some downside for the dollar, but then it was a massive confidence booster and the dollar drove higher after. So those are just my views, guys. Look, guys, baby, we do this every single day at the Freak Network. So not to hesitate, check out our membership, fundamental and technical analysis and setups every day, baby. Let's get it.